Hello, everybody. Welcome to our webinar on the future of commercial town centres. This is being hosted as part of the RTPI's Planner Live Online, which is our week of digital events which look at how planning is coping in an age of crisis. So I'm James Harris, the Policy and Networks Manager at the Royal Town Planning Institute. And we're really pleased to be running this event in partnership with CoStar Group, who are a leading provider of commercial real estate data and analysis. So at the beginning of this week, the RTPI published a paper which examines the impact of COVID-19 and the economic downturn across the built environment. And it sets out how we as planners can help to shape a more sustainable, resilient and inclusive recovery. Now, one of the key areas that we discuss in this paper are the impacts that we're currently seeing on economic activity and labour markets. And it's really clear that COVID-19 has both kind of created some new issues here, but also accelerated changes that were already underway. We've seen some quite intense job losses in specific places already, such as around Gatwick Airport, where Virgin Atlantic and British Airways have announced major redundancies. We've seen huge impacts on high streets and town centres, which have been hit so hard by the lockdown. And parts of the country that rely on tourism, on entertainment, manufacturing, even the presence of university students have also been affected. As the government furlough program ends, it also seems really unlikely that employment will rise, and we'll see some of those on the furlough program, some of that being converted into job losses. At the same time, we've seen some other trends that are kind of neither positive nor negative necessarily, one of them being the big increase in home working during lockdown. Now, while I'm sure a lot of people are very kind of keen to return to the office, it does seem likely to me that demand for commercial real estate will be hit by a number of factors, including the continued demand for social distancing requirements in offices, and from companies which decide to downsize or relocate or perhaps entirely close their offices in order to save money and prevent layoffs. We might also see demand for new types of offices and live workspaces emerging outside of central business districts. And of course, during this time, we've seen some sectors expand during the pandemic, including in teleworking, logistics, home delivery, technology and digital entertainment. And these are sectors that were already in quite a strong position, and I imagine we could see their continued growth in the future. And finally, we've heard some encouraging noises from government around prioritising green jobs in the recovery in sectors like renewable energy, building retrofit and electric vehicles, and also calls to restrict bailouts for more polluting companies. Following calls from numerous high-profile organisations, the Committee on Climate Change and the RTPI's Environmental Justice Commission, we've seen some big recommendations for the government to kind of plough all of their efforts into boosting green jobs across the country. And if this green industrial revolution really takes place, then we could see some really strong job growth in quite different places to how we've seen before. So the purpose of this event today is to think about some of this uncertainty. How is this going to play out, and specifically what will the future of commercial centres look like as we move from the kind of managing the immediate impacts of COVID into the recovery phase. A lot of this is very uncertain, and it will depend obviously on how government acts, whether we see successive waves of infection, etc. But it did seem very likely to me that the distribution and nature of economic activity is not going to look like the past. The question, I think, for the planning profession is how do we proactively plan to meet these changes, enable the type of kind of green industrial revolution that we want to see, rather than simply adapting to changes as they occur. So to help us understand this today, we're joined by two really great speakers. The first is Mark Stansfield, who's the managing analyst at CoStar. He'll be describing some of the trends that they're seeing in the commercial real estate market and where better data and analysis can help planners to understand what's happening out there. Then we'll hear from James Shuttleworth, who's the head of planning at Salford City Council. He'll be helping us think about how planners currently seek to meet the kind of land and infrastructure needs of commercial real estate and some of the challenges that he thinks we're going to be experiencing going ahead. After these two presentations, I'll be sharing a little Q&A with the two speakers about how we can plan to kind of adapt to the different future of commercial town centres. But first up, I'll stop talking and we'll hand over to Mark Stansfield, who's going to kick off with the presentation from CoStar.
Great, thanks James, and hello everyone. So I'm going to spend the next 10 minutes or so just running through the latest market trends, drawing on CoStar's live database of more than 500,000 commercial properties across the UK. I'll start with a quick look at the economy and then move on to look at the office, retail and industrial sectors in turn, before a summary at the end. There's a lot to cover and I'm going to whip through things pretty quickly, So brace yourselves for a cacophony of colour, light and information, all tied together by this rather monotonous voice. So first, the economy. The COVID-19 crisis is having an unprecedented impact on economic activity. The UK economy shrank by a combined 25% in March and April, wiping out nearly 2 decades of growth as the UK braces itself for its worst recession for 300 years. On a more optimistic note, the latest IHS sentiment survey indicates a big bounce back in business activity in the month of June, suggesting the worst is very much behind us, which is encouraging. And although Oxford Economics recently revised its forecast downwards for 2020, the firm is predicting a V-shaped recovery, with a 10.8% drop in GDP this year, followed by a strong rebound in 2021. Incidentally, Oxford's forecast plays out differently across regions. London and the South East are expected to fare relatively well, given their greater reliance on more resilient office-based sectors, while the North East's declining population and greater reliance on manufacturing will see it underperform, all of which could present a challenge to the government's levelling up agenda. So moving on to look at the office sector, and to do this, I'm just going to address a few key talking points, starting with a quick look at the state of play as the crisis began. Well, as you can see, UK office landlords entered this crisis in a strong position. The national office vacancy rate was below 5% in March 2020, its lowest level in well over a decade, with all major markets across the country, except oil-dependent Aberdeen, enjoying vacancy rates comfortably below the long-term averages and with a relatively modest speculative development pipeline. So what's happened in the office market since lockdown began? Well, new leasing has of course slowed markedly, but activity's not ground to a halt completely. More than 400 leases have been signed since lockdown, and it's the public sector that's dominated so far, accounting for just over 40% of office take-up. By far the largest deal was by the Home Office, which pre-let 330,000 square feet in Croydon in April. The largest private sector letting so far occurred in the city, where US law firm Covington and Burling pre-let 86,000 square feet at 22 Bishopsgate. But we're seeing sublease space being released onto the market too, perhaps unsurprisingly in the current climate. For example, Bailey Gifford recently placed its 62,000 square feet office in Edinburgh onto the market. And indeed, our daily vacancy rate data does show early signs of softening in the office occupier market. UK office vacancy at a national level has risen about 10 basis points since the lockdown began, ending a near unbroken period of falling vacancy going back to 2012. On the development side, the rate of construction starts has of course slowed in recent months, but one big speculative project in London has commenced at 40 Leadenhall, meaning the overall level of construction activity has risen to a decade high, with more than 30 million square feet under construction nationally as of June 2020. On the investment side, we've noticed a sharp fall in the properties being made available for sale. In fact, May was the quietest month in the past 6 years as potential sellers, particularly in the office sector shown in blue, put plans on hold. This should help to support pricing in the coming months. The few investment deals that have occurred have largely involved safe, well-let assets. All of the deals shown here in London, Coventry and Edinburgh fit into this category, with limited demand for value add or development sales in the current, more risk-averse climate. So moving on to the third question, and there's been talk in recent weeks of a potential rise in suburban demand as part of a hub and spoke model, as public transport becomes less desirable. And that's a trend we've already seen emerging in the US. So will that happen over here? Well, it's probably unlikely to happen in London, and that's partly due to the shortage of office supply in the suburbs. Many office buildings in outer London have been converted to alternative uses since permitted development rules changed in 2010, including this example near where I live in Harrow, with a former Ladbrokes HQ converted to flats. As such, there's very little space to accommodate firms seeking offices outside of central London. This trend has also been recorded in the regions, particularly in places like Liverpool, Sheffield and Glasgow, where many offices have been converted to hotel, student or residential use in recent years, aiding vacancy compression in many places, even in the absence of much demand. So which office markets or towns and cities might perform best in the coming months and years? Well, recent demand trends can help to answer that question. There's been a big shift towards major cities in recent years and away from smaller towns. For example, the map here shows all 270 BT locations in CoStar, which they plan to consolidate into just 8 major hubs in the big cities over the next year or two. HMRC are doing likewise, exiting the likes of Middlesbrough and Sefton and Merseyside to open big offices in big cities, with many of these hubs due to complete construction this year. The somewhat limited trend of north shoring has also favoured the big cities. The BBC and more recently Channel 4 have moved staff to Manchester and Leeds, with some banks and law firms moving staff and some departments from London to other big city locations. So big cities could remain fairly resilient, as could smaller cities like Cambridge and Brighton, which feature highly in our recent CoStar 50 index that ranks office demand relative to a city's size. Cambridge has carved out a niche in medical and high-tech demand and should continue to do well to Cambridge top this series. As could places like Brighton, shown here in 3rd place, where demand can be gauged through net absorption, as shown in the table here, but also through other measures in CoStar's live database. For example, here's a chart showing average months on market for office space in Brighton versus the Tees Valley and Durham. 7 months and falling in Brighton versus 22 months and rising in the Tees Valley, all of which could be useful in gauging market softness, but also in influencing planning decisions. So what's the overall outlook for demand, vacancy and rents? Well, CoStar's baseline forecast for supply, demand and vacancy has the national vacancy rate increasing over the next few years in line with rise in supply, although the furloughing scheme, reduced office density and the relatively strong rebound in jobs means any increase should be gradual, with vacancies remaining fairly low throughout the forecast. Which should feed into a fairly benign rent outlook. Rents are expected to fall over the next 12 months, but only by around 1% or so. Rents should then flatten off and grow by around 1% per year thereafter in our baseline forecast. However, in our severe downside scenario, where the pandemic remains uncontained for an extended period and leads to widespread economic turmoil, unemployment jumps up and net absorption turns sharply negative. The national office vacancy rate jumps to around 8% and doesn't peak until 2023. However, even in this gloomy scenario, vacancies would only return to levels last seen in 2014. Rent losses would of course be much steeper in this scenario, with average rents falling by more than 20% over the next 2 years and not returning to current levels for the remainder of the forecast. On the plus side, this could give stable firms an opportunity to upgrade their space. Moving on to retail, a sector that was already struggling before the crisis. Now, there are many themes I could touch on here, but I'll just mention a couple that pertain to planning. Firstly, the shift from physical to online retail spending has accelerated sharply as a result of the shutdown, through necessity, but also as more people become comfortable with spending online. The share of online spending rose to record heights even as the lockdown eased a little in May, which may not bode well for physical stores. And this is likely to accelerate the trend of retail conversions. Amazon recently bought a former Toys R Us in Croydon and a retail park in Mill Hill for conversion to last mile. Ballymore in the middle here is also under offer on a deal to convert a shopping centre in Edgware to residential, while a former M&S in Stockport is being converted to offices. This conversion trend will be a persistent theme, I imagine, in the coming months and years. So moving on to industrial now, a sector that has largely benefited from retail struggles and where demand has remained resilient during the crisis. Industrial vacancies have been on a steep downward trend in recent years, and healthy demand from supermarkets and online retailers should help to offset any industrial space vacated by smaller businesses, keeping net absorption positive and vacancies fairly low, which bodes well for continued rent growth in our baseline scenario. Although the recent slowdown in the pace of growth is likely to continue, industrial should continue to outperform other sectors. This relative optimism around the industrial sector can be seen in our new planning portal. Developers are pressing ahead with schemes amid the pandemic, with each orange dot here showing a planning application that's been approved since the lockdown began in March. More than 250 in total, more than for any other sector. And while planning consents have unsurprisingly slowed since the crisis began, as shown by this chart, industrial in grey continues to lead the way, with early data from June suggesting a healthy rebound in planning consents too. Investors, meanwhile, continue to pile into industrial, especially urban logistics. Blackstone's been active as part of its Mileway joint venture with M7, closing several deals since lockdown. Mayor Bergman in the middle here has launched a €2 billion fund targeting urban logistics across Europe, while Segro is targeting urban logistics and more acquisitions after spending 200 million on Perivale Park just a few weeks ago. So there's lots happening in industrial, particularly surrounding urban logistics. So to summarise, office landlords entered the crisis in a strong place with low vacancy and a relatively modest spec pipeline. Lots of talking points around the office sector, one of which is will more working from home be neutralised by reduced density within offices, leading to a similar level of office demand. Retail is in distress, but the crisis is just accelerating existing trends. And industrial is fairly resilient, with private equity piling into last mile units. But the picture is nuanced, and access to accurate, meaningful, comprehensive and timely data is never more important. And on that note, a wealth of market reports, charts, forecasts at a national level, but also at that granular level, can be accessed in the CoStar platform. And it's not just reports, but videos too, over 35 in fact since lockdown. Look at these handsome gents on the screen there. And there's also a wealth of dedicated planning data in CoStar with comprehensive planning applications going back 15 years across the country, all easily searchable using the map layers as I showed on the slide earlier, with environmental map layers coming later in the year to help assess flooding risks, etc. As well as comprehensive ownership data with more than 25 million title polygons available at the parcel layer across England and Wales, with Scotland to follow. So anyway, thanks for listening to that whistle-stop tour, and I'll now hand back to James.
That's brilliant. Thanks so much, Mark. Really fascinating presentation, and it's just great to see so much high quality data out there that planners can use. We're now going to hand over to James Shuttleworth, who's going to talk a little bit about how the planning profession currently kind of seeks to deal with these different types of trends before we move into the discussion after that. So James, I'll hand over to you.
Thanks very much, James. It's always confusing to have two Jameses on a virtual thing, isn't it? Hello, everybody. My name's James Shuttleworth. I'm a head of planning at Salford City Council, which means I'm responsible for planning policy and economic environmental policy, obviously economic discussion. It's great to be here today. I'm sat up north in Manchester, Salford's younger cousin. So hopefully my connectivity will be fine. If not, it's because I've stopped pedaling fast enough, I think. I've got a short presentation today, with not quite the level of fascinating data that was in Mark's. That was wonderful, Mark. But it's just going to look at the planning process and how we use data to look at how we plan commercial development. Sort of focus on how we do plan for commercial development, the data we take into account, and how it goes into to shape our plans. And then a bit of a question about whether we're getting it right. Those sort of questions are always loaded with perhaps not entirely. Are the conclusions we get reliable? Does it result in the most sustainable approach to our plans? And could we be doing it better? And then finally, have a think about how we can plan for post-COVID-19, whatever that means and whenever that might come, with some ideas about what I might think we can sort of conclude from what's happening at the moment. I'm sure it won't be the same as what other people might be currently concluding, but we'll see in the discussion, I'm sure, what the various thoughts are on that issue. I mean, overall, in terms of approaching planning for commercial development, the National Planning Policy Framework doesn't say a great deal on economic development. It's just 1.5 pages of the NPPF, whereas housing gets 6 pages, and the bit that sort of talks about how you get the process right gets 9, and then half of the 1.5 pages on economic development are looking at rural areas, which obviously are very important, but not when I'm sat in Salford. However, what the NPPF does suggest is that districts should try and anticipate and plan for meeting the needs of meeting their needs for economic development. And what that sort of gets translated into, I'm sure slightly linked to the numbers obsession that comes from housing, is that we put an awful lot of effort in trying to forecast the level of economic growth that we need in our plans and turn that into a quantitative assessment of what we need to try and plan for, how that translates into meters squared and into hectares of employment land. And so we try and look at what data might be available to give us to answer that sort of question. At Salford, the key input we've used in the past to address this is looking at past take-up rates. I'm sure we're not the only authority who uses that approach. This slide here just shows some figures from the most recent version of the Greater Manchester Spatial Framework, looking at how you would look at past take-up of employment space and how we will use that to try and forecast what might happen in the future. But as I say, the same approach informed this Greater Manchester-wide document as we do at Salford. And I'm sure most of us recognise that it is a slightly blunt approach to working out what's going to happen in the future. In particular, how can this approach really take account of sort of broadly foreseeable changes in the strength of the economy and sectors that are growing or declining, and in changes in the way that we work. And it's obviously not terribly nuanced in that area. We do regularly try to address that by looking at econometric data. It never quite seems to do the job well enough when this forward look, whether it's the issues of dealing with losses or churn in the floor space, or whether it's issues of how jobs are recorded in the data. There always seems to be a reason why we end up back looking at past take-up rates. It's just an area we sort of keep seeming to come back to. You can see that there are efforts, I think, to try and nuance the past take-up rate forecast, trying to take into account some of the econometric issues, such as growth rates, such as areas that are forecast to expand. One of the things I always seem to hear from economists when they're explaining this is that the one thing that's certain about their forecasts is that they will be wrong. This is another table from the Greater Manchester Spatial Framework in the last version, and obviously planners showing their similar level of expertise. And I don't know if you can see the column on towards the end, but it was anticipated that the 2008 recession was once in a lifetime, and I think from what Mark has just said, that's probably not really lasted beyond this webinar. as an assessment. So obviously planners can do it just as well as economists too. So that's something to be proud of, I'm sure. In terms of doing the process of planning for economic development, what we then do once we've got a level of growth and check we have a land supply, what we tend to do, I suppose, is align that with our housing numbers to make sure that we are planning the right level of economic development, and it's complementary to the housing growth. So another sort of example of whatever we do in planning, it always seems to come back to housing, which is one of the issues I think that sort of it does slightly plague planning at the moment. I mean, whilst I think it is difficult to come up with a better way of doing this planning job of forecasting growth, I certainly don't think this is necessarily the right way in which we should plan, or the most effective way in which we should plan for commercial development and for the growth of our commercial centres. Despite the clear value of understanding our history, there's only so much you can understand about where you're going by just looking where you've been. It's also clear that we have a fairly blunt approach to types of employment uses. So in planning, we look at offices, and then we look at industrial and warehousing. And not only does that miss the sort of the nuance and the different types of uses that fall within these classifications, it also struggles to try and take account of all the jobs growth that we have in terms of education and associated research or health sectors. And they're obviously all key jobs, especially in a city like Salford, where we've seen enormous growth in these sectors. And we sort of have to sort of almost ignore it within our forecast. So again, it's not a perfect approach. And it's important to try and refine it. However, the point, I suppose, the main point I want to sort of conclude on when we get to these, we're talking about this way that planning uses econometric data, is it feels we've become overly focused on forecasting what will happen in a quantitative sense. And I think it'd be nice to put a bit more effort into the kind of places we're making, rather than sort of how much of those places we are creating. And it often seems that when you talk to sort of non-planners about the precision with which we are anticipating housing development over the next 15 years, people become a bit bemused. I can only think when we apply the same approach to economic growth, they must think we're being even more fanciful. So I think whilst economic data does provide, and it can provide, an important sort of sense in a forecasting sense of the scale and the direction of growth, I don't think it should be used. We shouldn't have to rely on it so much to give a concrete idea of how much growth we need. I'd much rather like to think about the kind of places we should be creating to try and foster a successful and sustainable and productive economy. And that feels like the area in which the data from companies like CoStar, or even that the councils hold, should be sort of focusing on as the basis for their plans. It's increasingly understood, I think, and recognised that the quality of place and the nature of a place is absolutely fundamental in terms of how much economic activity will be attracted, how productive and how sustainable that activity will be. And so if we're looking to try and attract economic growth, especially in the recovery from the recession that appears to be on the way, it will be important that we create the right kind of places, and that these places respond to the economic opportunities that places like Salford and other districts in Greater Manchester are looking at. And so we are making the best play of the city region can do. I also see this as an opportunity to try and reintegrate sort of the different uses within the place debate, and in terms of planning for place. The focus on the sort of numerical and quantitative approach does tend to lead to creating planning silos. So I'm sure lots of people and lots of local plans are organised in terms of topics rather than areas. And so we will see emerging in plans, including sort of emerging plans, that the policy that applies to a home will be in a different chapter from the policy that applies to the retail unit, the floor below. And it feels like if we can have a better understanding of the data and the economics driving successful places, that will help us to create a form of planning that can more effectively deliver economic success, rather than worrying about whether it's actually identified enough land and then sort of sit back and wait. I mean, that seems particularly appropriate to me when we're looking at commercial development. In this area, it's the pursuit of quality, alongside or maybe even above quantity, that will determine success. When we're trying to attract investment to a place, what the investors are looking for isn't necessarily just a sort of a sense of measured need, but they're looking for the most investable opportunities, and the quality of place is a really key thing in that. So rather than trying to tick a box of achieving the right amount of land, I'd like to move to a place where we can identify the best opportunities we have as a place to attract the best kind of economic growth, to reflect our ambitions, to be inclusive, to be sustainable, to be green, and to be economically successful. And that feels like more of an opportunity in terms of understanding the input we can get from sort of research into clarifying the economic geographies of our places, to make sure that what we are, when we're preparing plans, we're not just trying to achieve a target sort of designed to cover 15 years, but we're trying to understand how places can best respond to economic opportunities. So that, I feel, is the direction we should be moving in, really. My final sort of thoughts on this presentation are going to sort of consider, I suppose, the post-COVID world, and this is going to be an intentionally sort of far more brief section, because I'm certainly not going to suggest that I have any confident opinions of what kind of world will emerge once we come out of lockdown, and once people begin to be able to interact and work in ways that were more typical of sort of early March. I think it's far too early for us to tell whether the office is dead, or whether the office is just a bit different, or whether actually the office is just the same. It feels like all those possibilities may come into play, and only time will really tell where we end up. One point I think that is important to make as a policy planner is that I think there will be a really, really important role for policy in this recovery, and I hope whatever thinking is going on in government about the overhaul of the planning system will take greatest account of this lesson. This graph, as I put on here, is from a colleague in Greater Manchester, looking at the impact of COVID-19 on carbon emissions, and the sort of the grey area is the carbon budget if Greater Manchester is to achieve carbon neutrality in line with its target. The red dashed line is, I understand, the most realistic target based on current policy, and the blue line is the potentially realistic accelerated route to try and get us to carbon neutrality. And the sort of lesson seems to be that the lockdown took us within our target trajectory for the first time, and not by a huge amount. And what we just conclude from that is, we're aiming to be a zero carbon city region by 2038. And sort of the question you have to ask is, what does that city region look like if it's carbon neutral? If lockdown only got us onto the trajectory we need to pursue. I'm reasonably confident that we can't rely on the market to achieve this particular policy objective, and so we will need a really effective policy response following this lockdown period if we are going to achieve our ambitions in this area, which strikes me as one of the absolute key areas that the country and the world is facing. So I would hope that, however we think the planning system may respond, it will recognise that there'll be a need across government to try and really drive different outcomes in terms of how places function. I'm really clear in my head that cities are going to remain really important as part of that policy response. So I'm certainly happy to pick up this discussion later, and I'm sure James and Mark might have different ideas about what the key issues will be. But as I say, that's something I think for the Q&A session. But that's my presentation.
That's brilliant. Thanks so much for that, James. Let me just pull back up my screen. Okay, so now we've got Mark back, and we've got James as well, and we've got about 10 minutes just to have a little chat about some of the issues that we've covered. James, just to follow on from that last point, I think that's really important on the carbon reduction side. Meeting our targets is not just about boosting jobs in green sectors, but about the types of places that we have to accommodate that job growth as well and make it sustainable. So glad to hear you bring that up. One of the questions I have for you, James, is around kind of the scale at which we plan for these changing economic trends. And obviously, Salford is part of Greater Manchester now, and you have kind of increased ability to think about that at a kind of strategic city region level. I was just wondering if you could reflect a little bit on kind of the planning activities you talked about, which ones kind of do make sense to think about at a kind of purely local or kind of smaller than local level, which ones require that kind of cooperation across Greater Manchester, and which ones are things that actually we should be thinking perhaps at the scale of the whole of the north of England, some of those kind of bigger trends.
I think that the Greater Manchester Spatial Framework has been a sort of exercise in understanding the concept of subsidiarity in planning, because, like you say, James, there are certain issues which, the reason the Greater Manchester Spatial Framework came about was because there were issues we had to try and address as a city region, issues such as meeting housing needs across what was deeply sort of interlinked different housing markets, addressing Greenbelt. It's quite difficult as a Greater Manchester Greenbelt for each district to take it on its own would have been very hard, and also to think about some of the infrastructure requirements that the city needs. So it's Greater Manchester has worked really well as a sort of unit for certainly sort of since towards the end of the 80s, and has just reaffirmed those links across districts since then. And so there's a real understanding and acceptance that it is a single economic region that operates together. There's an understanding the city centre that sits in Manchester and in Salford drives an awful lot of what the economy for the whole city region, and most people who live in the 10 districts all have to make their way into the city centre. But we have key economic opportunities elsewhere around the M60 and the town centres, the 8 town centres for Greater Manchester. So these sort of thoughts about where growth should go and how growth should be supported have to be dealt with at that city region level, because otherwise it becomes sort of a self-defeating bun fight. So that's one of Manchester's great strengths, is identifying its priorities, and it should do that at the city region level. I think, again, more generally, I would generally say it's the infrastructure challenge that we should be looking at in the north. And I know sort of the Northern Powerhouse and the sort of Transport for the North ideas began focusing on those infrastructure challenges. I had a former colleague who was slightly rueful that it expanded so broadly into to cover other areas, because there was a really strong message, but it was, how do we connect the north and allow areas within it to make the right decisions to sort of take most advantage of those links. And then so when you get down to the very local, there are places are so distinct, and it's Greater Manchester is 10 boroughs. I previously have worked in Manchester, and I thought the whole thing was Manchester. And now at Salford, it's really clear Salford has such a strong identity and such a sort of strong sense of place that there are issues that are important, not just the sort of geography, but the sort of political outlook of Salford has priorities that we need. It's democratically important that we're able to pursue the things that are important to Salford. But I recognise there are many issues that Manchester wishes to address.
Yes.
And so the coherent planning framework that allows both sort of an effective strategic approach to the city region level, but doesn't sort of obviate the options to make appropriate policy responses locally.
Thank you. And maybe a question more for Mark, although James, you might want to jump in as well. Now, I was thinking, CoStar obviously, generates a huge amount of its own data, its own analysis, and you do a lot of hard work to gather that up and provide it to local authorities. But I mean, are there any gaps in the data or types of analysis that you think could be really helpful for local authorities, where perhaps national government could act by opening up some data that we don't already have, or kind of help you by providing some of that kind of baseline data that you can kind of add value to when you turn it into kind of your economic forecasts and models?
Yeah, sure. I mean, we have a large team of 100+ researchers that continue to collect live information on availability, rents, deals, as they have done for more than 2 decades. But some of the data sources you mean, and the release of national data, has actually happened in the past couple of years, and we've been at the forefront of that. So, for example, we've digitized more than 75,000 land registry lease and sale transactions over the past 18 months or so, and also adding 25 million title polygons on to help with ownership of land, so that tenant credit ratings, demographic data. We're trying to pull all these disparate sources to become a bit of a one-stop shop for real estate data and analytics. And there's the environmental map layer I showed earlier. That's new and is newly released, and we're going to bring that into the product, as well as Registered of Scotland ownership data as well. I guess one, the data on the lending side, who's lending to real estate, that's something we have data on in the US, and it's something we're trying to bring in to our product as well. So getting that sort of information will be useful to lots of stakeholders within the industry. And then just I guess, wider comparisons with other countries in Europe, and we're trying to leverage public data and in other countries to, you know, create international comparisons as well as you know, national comparisons on a city and local authority level.
Yes, and that's really important to look at how other countries have approached this as well, because I mean, you know, James, one of the things you touched upon is that you know, quite often, not just with planning for economic change, but also infrastructure need and things like that, you know, it's the kind of prevailing planning approach is kind of, you know, to look at the data about what the past has shown us and kind of assume that broadly the same types of things are going to be the case going forward. And I think we have seen some good steps from government recently to set out a bit more of a vision for actually what we want the future to look like and how we're going to get there. So things like the modern industrial strategy that came out a couple of years ago, you know, that starts to kind of chart a course for what we would like the economy to look like and the types of job growth we'd like to see. And then it's kind of my hope that with, you know, better data and analysis, we can kind of model what that future looks like and start working backwards to think about the infrastructure need, the housing demand, and how all those things will play out. And I'm sure, again, kind of looking at the approaches that have been taken by other countries that are perhaps a little bit harder down this, a little bit further down this path might help us as well. I mean, Mark, as well, I was wondering if you know, are there any other kind of trends that you think are playing into the locational choices that are being made by firms at the moment? Any other things that might kind of alter the types of land and the types of locations that they're looking for?
Yeah, well, in the presentation, I sort of touched on a possible shift to more suburban working and a hub and spoke model if space is available, because given there's been a lot of conversions in the suburbs to other uses, as well as, you know, perhaps greater working from home on a permanent basis, or at least more flexibility, as per a recent announcement by the likes of Facebook and Barclays. We've also noticed a few examples of companies looking more to self-contained single tenant buildings for extra, you know, control and security, and to alleviate any issues around lifts. But will, you know, demand for office space will persist. It will remain a vital space for sharing ideas, bringing staff together, placemaking, etc. Particularly young people whom surveys have found working from home less appealing. And of course, demand could bounce back completely if the vaccine's found and things get back to normal pre-COVID normality, albeit with perhaps reduced density and obviously more thinking about the next pandemic, etc.
And James, are those trends that Mark mentioned, you know, perhaps a greater take-up of home working, maybe a shift to more suburban commercial real estate demand, you know, obviously if those are big changes, they could have quite significant impacts on, you know, the way people move around, patterns of commuting, things like that. Do you find it kind of straightforward enough to link those types of trends up with transport planning that's going on in Manchester? Do they all kind of pull in the same direction, or?
I mean, I suppose sort of speaking on behalf, but speaking from a very much a city region, that's one of the reasons I suppose I'm quite keen on sort of pausing before we sort of reach real conclusions on the suburbanisation of work. I mean, I sort of alluded to in the presentation, you know, Greater Manchester's success as a city is because of some of those sort of agglomeration benefits we get by working alongside, by having those sort of opportunities to sort of co-learn, and I would anticipate those advantages still being accessible, and probably, you know, once we end up in a situation where we are managing the current challenge better, then people will still want to access some of those advantages. So I would hope that there are opportunities for town centres across Greater Manchester, which probably haven't seen the benefit of the investment, that we can try and look at some of that sort of a hub and spoke model, which provides opportunities for investment in some of our key town centres. And Salford's got sort of intentions to try and really improve some of its centres, because the bulk of development of investment has gone into the city centre and at Salford Quays. But we certainly don't see the job being finished in those locations. I mean, I think what you talked about before in terms of understanding what the future of the economy might look like and sort of back engineering it in terms of what policies we need is a really interesting idea. I mean, I do feel to a degree that sort of the counting square meters of employment does to a degree link to the housing counting, and maybe if we had a slightly more flexible statutory planning system, we wouldn't have to have those links so sort of so rigidly incorporated within our plans, and the plan could be far more of a 5-year vision, which then we can quickly update it. I know we work closely with colleagues in our regen and development team, and they're not that bothered on the about the 15-year projection of floor space. They want to know how they can get what the best opportunities are for investment now, how we can create great places, and that's sort of the planning we should be doing anyway in our local plan too, as well, rather than just trying to sort of address some sort of slightly more arcane area of policy requirements, but get back to sort of the important bit, which is shaping place and trying to, supporting the sort of market opportunities that, as the sort of final slide, I suppose, of my presentation shows, also managing to sort of influence and mould outcomes to reflect those that we need to try and achieve. I mean, from a Manchester point of view, in this city centre in Salford, Manchester and Salford, 25, 30 years ago, the evidence would have said no one wants to live in the city centres there. And now it's 80% of development in Salford is probably within that area. So you have to be careful what it necessarily teaches you. And there must be a role for sort of vision in planning and sort of identifying opportunities. And I think we're probably far too light in terms of the sort of data that Mark has access to, as a shaping where we should be going. And it's probably what you want. After is a system that gives councils the incentives and the tools to actually be far more proactive in making growth happen, rather than almost having a sort of a far more sort of supine plan which sits and then waits for proposals, but actually allow councils to get on the front foot and deliver the kind of development that most places do really want. We develop a sustainable city, and we're pretty sort of keen on doing that and delivering that.
Yeah, and I think, like you say, it's not about there is so much uncertainty about how this plays out, and I think one of the key roles of planning is just creating the kinds of places that are resilient to a whole bunch of different futures, kind of no matter what they might be. I think we're about to run out of time, so we'll have to wrap it up. But thanks so much to Mark and James for taking part in our presentation today. I hope everyone watching enjoyed it too. If you want to read our paper on the role of planning in the recovery, you can visit rtpi.org.uk to take a look at that. And of course, throughout this week of our events, just follow us on RTPI Planners on Twitter and our other social media accounts. But again, thanks very much for joining us, and we'll leave it there.
Thank you for having me. Thanks, James. Thanks, Mark.
Thank you.